Hey everyone, my name's Andy. My channel's Finding Value. If you are looking for value, if you're looking for new investment ideas, subscribe to the channel. I talk a lot about commodities, and commodities right now are extremely underpriced given ratios and how you price them against other assets. They're cheap, cheap, cheap. So one thing I want to focus on today is timeframes. And I know a lot of people, they look at price, they look at it for like a week or 2 weeks or 3 weeks, and they say, "Hey, look, your investments are they're going down." And my time frame isn't on a week or a month basis. I'm looking at big picture items. I'm looking at 1 year, 2 year, 3 year, 4 year, 5 year time frames, or longer, maybe even 15 years. And it's very hard to know if you're right or wrong unless you have seen this stuff for a while. And so I understand you think the price is going down, and you think it's going to be a bad investment. For all of a sudden, it forms this gigantic chart pattern. It breaks to the upside, and it does a 300-400% move, and you feel like you're the genius, for cost averaging in at such cheap prices. Patience is what's going to reward you here. And if your time frames are right, if you get your head wrapped around the time frame, you're going to be successful. If you don't wrap your head around the time frame, if you guys are short-term traders and you're used to seeing immediate feedback, sometimes these trades take a little bit, not trades, but investments take some time to actually work. So it's not a short-term, I'm going to buy it and hold it for like a month and see this gigantic return so quick. Sometimes it works like that. I try to read the charts. Sometimes it works very well. Other times you have to be patient. I'm going to go over some examples in this presentation about all those things that I'm talking about in terms of time frames. So value and price, value and market conditions take time to change. They're not overnight. When I look at some of these charts, we're looking at momentum changes from very steep declines to flat declines to moves up, which may take a decade to do all that. So it may take a decade for it to move on up and get a 10 bagger, 20, 30, 40, 50 times your money, whatever it is. Price volatility is normal in the short term and can be quite dramatic. And if you're not used to that, it can be very tough. And I understand that. It took me a while to get used to it. I may cost average into a position for a few years. That's my outlook. And when these things start to move, you're going to see some substantial moves, which can happen in a year or two. They could go up 1,000, 2,000%. But what I'm doing is I'm just holding on and being patient. Nothing goes straight up or down, and the metrics will oscillate a bit. So it doesn't mean that your metric, like a ratio or a price, it's not going to go straight up and it's not going to go straight down. They're going to oscillate all over the place. So be prepared for that. We're looking for big trends, big long-term trends, and we're looking for momentum to continue for the big trend. So a short-term pullback is expected and will happen. You could see 30, 40, 50, 60% down movements in your investments at some point. It is very much possible and very likely that that's going to happen. And price, the large structural trends are being broken from the downtrend to an uptrend right now in a lot of these companies. And again, 50 to 60% pullbacks are normal. I know that seems rough, especially in some of these really small companies. We had a massive rally in oil and uranium, and it may take time for some of these companies to pull back and resume an uptrend. So be patient. And if you look at it from a big long-term perspective, gold has been in an uptrend since 2016. Not a lot of people, I think, recognize that. So Teuton Resources, just to show you an example here, this is one of the companies that I own. I bought in these red circular portions. We've got this down. I didn't even know about it back here, so I would have bought it down here too. But here's a down, here's a resistance line that it broke, and it shot from, 15 cents all the way to 65 cents. And it did it very quickly. It did it in the June, July timeframe, maybe even May, kind of just blew all the way up really quick. And then it went from 65 cents down to maybe 30 cents. It was cut in half almost, or maybe even a little more. That's a 50, 60% decline. Now, are you prepared to weather that? Because if you had bought down here, if you bought at 15 cents, or maybe even 10 cents or 5 cents, you would have gone up all the way to $5 almost if you could hold on in a very relatively short time frame. And the worst thing you can do, in my opinion, is to be trying to trade in and out. Because if you come in here, you get in here, oh no, I better get out. And then all of a sudden it jumps like this. And then you get stuck out of it because this move is so big, so fast. And then we get this pullback and it moves back up and pull back. Then we got a nice big chart pattern forming and broke to the upside. Rocket launched. And now we've got this chart pattern. It broke to the upside and it's kind of just meandering sideways, waiting for a move in gold and silver. And maybe this pulls back down. Maybe it pulls down a little bit and then goes on up. Who knows? But Newton Resources is a royalty company. They own a lot of the Golden Triangle area. And I'm holding on for the long term. I see this as a long-term hold. This looks like a gigantic bottoming process. And given the market conditions, given the housing starts, given all this stuff, I think it's going to be a good investment. I'm not saying Newton Resources. I'm just saying commodities in general. Here's the housing starts. Again, they're in an uptrend. They're moving on up. This is inflation. This is market conditions. This is going to support commodities. And I would be very worrisome if we saw this just dive way down. That's when I would get worried. But right now, everything looks great. And I'm going to give you a story on platinum here. I've been buying platinum since 2019 because of the ratios and its ability to be a substitute for palladium. The short-term price movements from day to day or week to week do not matter. They do not matter, at least not to me. I'm looking at value, and I'm going to show you some things of what I look at and why I was buying when I was buying. I'm going to correlate it to some price charts as well. So I'm looking at the big picture of how cheap platinum is in relationship to other metals. That matters. It matters for investors. It matters for people who have palladium. They're using palladium, an industrial user, and they could use platinum instead of palladium. It matters to them. These relationships have meaning. It drives consumer and industrial user behaviors at certain limits. And this is the ratio from 71 all the way to 2016. And I got these red circles just signaling that platinum was cheap during these time frames. Extremely cheap. And platinum got below 0.5 in relationship to gold. This is the platinum to gold ratio. It got below 0.5, and I was looking at this going, oh my God, this is so cheap. It is such an opportunity. And I'll show you why I think that. But this is the ratio. This is signaling that platinum's cheap in relationship to gold in the circles. And I overlaid those circles with price movements in platinum. These are the prices, and these red circles are saying you should be buying it here, you should be buying it here, you should be buying it here, you should buy it here. It carved out this gigantic pattern here, and then it blew way up to the upside. Now, what I like to do is you can have a cheap ratio, and if you're swapping metals back and forth, this move here, you probably would be swapping back and forth. But if you saw a cheap ratio here and you see a chart pattern on top of it like this, it means that you're about to break out and move very large to the upside. Now, this is just history. We had that confluence of the ratio being cheap and the chart pattern consolidating down here in the late 70s. So I would have been a major buyer here. And then look what ensued. Now here, you don't really have that. I would probably still look at it for a ratio swapping potential here, but you don't have the big chart pattern to back up. Here you do. You've got the chart pattern and the cheap ratio. You buy the living heck out of it, and then you hold on and look for a top at some point. We've got the same thing happening right here today. We had in the 2020s, early 2020s and 2019, we had this ratio that was below 0.5. It's an anomaly in history. And we had an historic low for the ratio, and we have a chart pattern that's developing. All these things matter. It means something. So platinum, whether you can do all the fundamental analysis in the world. Now, this technical analysis right here, the way this thing is coiling up like this is a group of people that are buying this in this psychological containment area. And some of these people know things, some of the people don't. But we're all buying it. I'm buying the living heck out of it. Someone else is buying it. Industrial consumers are buying it. We are all creating this pattern. This pattern is telling us, whether we did the fundamental analysis, whether we did something, that people are buying the living heck out of it. That's what it's telling us, and that it's about to break to the upside. And we see right here that it did break to the upside. And if you've been on my channel for a long period of time, you know how bullish I was on platinum, and I still am bullish. But we broke to the upside. I was saying this thing's ready to break. Just wait. And here we did. We broke it. Now, we could do a pullback like this. It could pull back, or it could just continue to go on up. I don't have all of the answers. I can't tell you how this thing's exactly going to play out. But with palladium where it's at, where rhodium where it's at, with gold where it's at, with inflation and market conditions, I have a tough time seeing how this thing could go lower. Absolute tough time. I can't envision a future. And you even have this going down in COVID, this sell-off, and it bounced right back up. So it was down there for a very short period of time. So I have difficulty seeing this thing head lower, given what I look at this chart, given the contraction, given the historical low ratios, given the cost curves. And this is where the price got in that COVID sell-off, was below these medium cost producers of South Africa platinum mines on the cost curve. These higher cost curves, they go up to $1,000 or so. So we're a little bit above the cost curve right now. But with palladium where it's at, with rhodium where it's at, everyone's going to be swapping over to platinum eventually. And platinum will be in higher demand given emissions controls, given whatever is developed with platinum, because platinum is the cheapest metal, and people are going to be looking at developing new products with platinum in it instead of rhodium and palladium. So this is the metal of choice. And that's why you want to be invested in the undervalued sectors, because those are the choices that industrial users and designers are going to use for their products. Now, what did I do? I did a couple of things. I looked at the ratio and I said, this has never been this cheap in history. It was at the bottom of a very large technical pattern. It was below the high cost producers of platinum. So I purchased a lot of physical platinum because of that opportunity. I do not own a lot of the mining companies since I think they will struggle to increase production and are not in great areas of jurisdiction. That's just my opinion. I'm not anti the mining companies. I just would prefer the physical metal. Inflation will continue to increase input costs over the years. It will also increase the price of physical platinum. Platinum is one of the best inflation hedges for metals. Now, you're saying, great, you showed me something that was a great opportunity. What about now? What is a great opportunity? And I think a great opportunity right now is uranium. I think uranium is the same spot as platinum was a little while back. We are under the cost curve, and I'm going to show you that. We've broken out of technical pattern. We have a ratio in an anomaly compared to history. It is so cheap. And guess what? What do you think I'm doing with all that? I'm a buyer. I'm a big buyer. So why am I a big buyer? Here's the ratio. This is history all the way back to 70. We've got the ratio up here at 62, above 60. This is ridiculous, guys. This is absolutely ridiculous. This is stupid cheap. This is an anomaly that isn't going to last. And we're sitting on this anomaly looking at it right now. So I've done a lot of technical analysis in uranium. You guys know my opinion. You can see the momentum changing. You can see things flattening out and turning. And we've got this ratio that's just sitting there at ridiculous levels. Now, here's the cost curve. I got this here. We've got, it's around $30, somewhere around there. This one's May 18th, but $30. I mean, we can produce maybe 120 million pounds, maybe something like that. And then you've got all these other guys that are going to have to turn on, because if we want to produce an extra, there's a 100 million pound deficit in 2030s. I'll show you that right here. We can go back and forth. Here's a 100 million pound deficit in the 2030s here. These deficits, if we're producing, I don't know, something like in the 140 million pounds, somewhere in this range, I mean, we're going to have to go all the way past all this. And that means that the price is going to have to come 70, 80, it's going to go above $80 a pound. So, and you have to, another thing you have to keep in mind is that these things will deplete over time. So you're going to have some of this. This is going to move to the left as time goes on, as other mines come offline. New mines have to come online just to stay flat, production-wise. So we're going to lower and lower ore grades for some. We're going to find more, and I think that finding some of these new deposits have great opportunities because you can experience the exploration value plus the developing of the mine and production value from some of these mines. So we've got a stupid cheap ratio. We've got a cost curve that's below the high cost producers. We have market deficits looking forward. And historically, if you look at this, we've got just massive leverage to the downside when this ratio compresses against gold. So I can't think of one reason we shouldn't be invested in this sector. And this is the price of uranium. We're about to break out of this other downtrend. If you look at it, line, if you were to draw it this way, we broke this like medium turn downtrend line here. Where it compressed up, broke to the upside. We came up, and if we can break this here, we could see a very large move to the upside. Again, here's another zoomed in look at it. We did break this to the upside, and we're kind of just tracking sideways. So, man, guys, this opportunity is, I can't think of anything that's a better setup. You've got a market deficit right in front of us. You've got a price that's still low. You've got a ratio that's off the scale. You've got energy. You've got an energy source, which is one of the higher energy densities, which is uranium, which is a preferable, and I'm almost going to say a must for the human race to move up the energy return on energy invested scale. You have to move up if you want to advance society forward. You've got a whole bunch of uranium is being put, not uranium, but nuclear power put in place. You've got power plants that are going to be running out of inventory. I mean, this is like this scenario and the leverage it has in relationship to gold. All these things, it's incredible. It is absolutely, I'm dumbfounded at how great of an opportunity this is. And I'm just glad that I know this information. I'm glad that I can present it to you guys, and you guys can research it for yourselves. But being an investor for the past 18 years, looking at all this history, I have not seen an opportunity this big, ever. And now this is going to take time to develop. It may not take time. It depends what happens to the price of uranium in the short term, long term, medium term. But I don't know how this thing could go down. The stocks will be volatile. You're going to have to live through these big moves. I just don't know how the price of uranium could go down and be sustained lower. That's what I'm getting at. I don't, with the anomaly of where the price of uranium's at in relationship to gold, I just see this as a very good opportunity with a bunch of leverage, the biggest asymmetric bet I've ever seen. If you guys want to partake in this, subscribe to the channel, give me a thumbs up, and thank you for listening. This is Finding Value.